Okay, so now we're going to see how to diversify our portfolio. Now, this is going to help us understanding how the market works better when we have different assets in our portfolio. Now, why is this important? Portfolio diversification is important because it helps you absorb some risks. And now you may discover that if you put, like they say, if you put all your eggs in one basket, once the basket drops, everything scattered. But if you spread them or separate them in different baskets, realize that when one basket drops, the other basket you can still rely on it. That's the simple essence of portfolio diversification. And it's very important as an investor for us to know this. It's very, very important because the market is unpredictable. You cannot say you can predict the market 100%. At some point, it's going to do the opposite of what you expected. So how do you avoid such disappointing moments? How you do that is through diversification of your portfolio. Yes, I'm going to answer questions. Someone raised question this morning, and we'll answer that question during the course of this class. Now, what did I say? Portfolio diversification is as an investor in the stock market, diversification of your portfolio, like I said, is very important because we treat it as if we treat it as important as we treat the return we're expecting from the market. I told us last week that if you are going into the stock market and you are not ready to lose money, please don't invest. Yes, don't invest. If you are not ready to lose any money in the market, don't invest. Even in our normal businesses, we take risks. You don't know what is going to happen the next day. You don't know how your supplier is going to react when you ask him to supply products to you that you're going to sell. You don't know how favorable the market is going to be. So you are going into business with the expectation that anything can happen. You are not in total control of the market. If you are not ready to lose money in the stock market, please do not put your money. Again, before you invest your money in any business, in any company, understand what the business does first. You don't just say because the stock market is open and this company's share price is low or is doing well, you just want to put your money. If that company doesn't have future prospect, trust me, it will crash. It will crash. Don't put your money in such business. First thing first, you need to understand the business you are investing in, what they do, how they make their money. That is what most of us in Nigeria fail to understand, and we are facing the repercussion today. We are facing the repercussion today. So if you understand what a business does, it becomes easier for you to actually invest and have confidence in whatever they are doing. Okay. Now, we are going to also look at portfolio diversification is, like I said, is an important aspect of every investment. Hello, are you saying something? Okay, I said portfolio diversification is very important. It helps us absorb risk. When you have your risk spread across different sectors, different portfolios, it helps you absorb risk. The downside when the share price of one particular sector or when a particular sector or particular industry is facing challenges. Okay, my voice is breaking. Are you hearing me now?
Okay, go ahead.
All right. So I said why portfolio diversification is important. It helps you spread your risk across different stocks, across different places. Um, this is also important, especially for those of us who have come of age or those of us who already have family. It is important we know this. There are different classes or there are different classes of investment or different classes of assets you can invest in, depending on your age horizon or your time horizon. Like I said in the videos in the Telegram channel, if you are investing, if you have come of age, let's say you are 50 years of age or 60 years of age, your investment should target mostly on mutual funds. Yes, because you never know what can happen. You have already come of age. I'm not saying that investing in the stock market or in stock is not going to yield you any result, but we are trying to consider your age. We are trying to make sure that you enjoy what you are investing in. You enjoy your money to the fullest. But if again you decide to invest in the stock market, it is also advisable that your investment should target, you should do your investment based on the age of your children. Like I told some of my clients, I said, if I have a child of 5 years old and I know that in the next 7 years, that child will either be in in secondary school, what I will do is I will invest in that child's future. Within these periods, I can take 5 years to make an investment all through for that child. Let's say I'm putting 5,000 naira on that child's name every month. When it is time for that child to go to school, it won't be difficult for me because I have already secured that child's future. So that is another way to make investment and to plan yourself. You don't just take drastic decision because you saw an opportunity, you enter the market. You must first of all know the reason why you are investing. There must be something in mind. So you don't, because I said you must first of all know the reason why you're investing. Don't invest because you want to pay house rent. This is not the kind of investment I want you to do. Every teaching I'm doing here is for long-time investment. I'm not doing this teaching for people that want to trade for 6 months and go out of the market. If you want to see the potentials in this market, you must trade beyond 6 months. You must trade beyond 3 months or become a short-time trader. That's not what I am training us here to do. I'm training us so that we can utilize the full potentials of this market. A lot of people are doing that. 1 year is not too much for you to endure. You have endured 4 years of bad governance. So 1 year alone is not going to be too much. So if you are thinking that when I say invest for 10 years is going to be a long time for you, you also realize that you have already put people in power that are into the system for 8 years. And without thinking twice, you will see that all this, they exalted their tenure and everything has gone. We come back to another cycle of election. So if you are investing, invest for a longer time, except you have come up of age, you have family, you have responsibility, you need to diversify, you will need to strategize yourself. Look at the things you invest in. So if you're investing, if you're a young man, you are within the age of 25, 30 in this group, a young lady within the age of 25, I don't see reason why you should be investing in mutual funds. Yes, because mutual funds will give you steady income, but it will not grow. Mutual funds will give you steady income every month, every year. The percentage is the same. But if you invest in the stock market has a potential of growing with time. So as a young man, as a young lady in this class within the age of 20, 25 to 30 years, there is no reason why you should be investing in mutual funds or federal government bond. There is no reason for that. So your main focus should be on growing assets, on growing asset. But if you have family, yes, if you have family, you may be trying to say, okay, let me conserve this. Let's say I will invest 30% in the stock market. I invest 10% in the money market, mutual funds, and then other asset classes. But mostly what I am teaching us here is to how to invest for a longer time. So like I said, investment diversification is very important. Why? Because it helps us absorb risk. When there is a downtime in another sector, we can still rely on another sector. The same way we can invest in different companies. Yes, we have people that do vertical investment. That's people that invest only in one industry. It is also good and it is also bad. But depending on whatever you perceive of the market, your investment should be diversified. Are we together? If we are together, please respond. Are we together? I'm talking. If we are together, please respond. Let me know. I'm talking. Are we not hearing me?
Yes, we are together a bit because your voice is wobbling at times.
Or it's just network? So, but I'm recording the session though.
Your voice is wobbling. It's not clear.
Okay, I'm recording the session. We'll still have the recordings. All right. So we have types of portfolio diversification. I have mentioned few of them. Number one is asset class diversification. What is asset class diversification? Now, asset class diversification is when you are investing across different,
Yeah, we are together.
okay, across different assets.
We are together. We can hear you.
Okay, okay, all right. So
I'm hearing you.
types of portfolio diversification. When we are talking about portfolio diversification, we are referring to where and where will you put your money. Where and where will you put your money? I have made mention of few places. I said, like I said, I give an instance. I say, I invest based on my time horizon. I'm a young man. There is no reason for me to invest in bond. There is no reason for me to invest in the treasury bills. There is no reason for me to invest in all these things that will give me steady, that will give me a fixed interest income. No, I'm still a young man. I'm not rushing anywhere. What I do is I put my money in places that grow my asset. But if your time horizon is like, if you're within the age of 50, 55 and 60 years old, these are places you should also look at. So asset class diversification is looking at you investing in the stock market, a portion of your income in the stock market. When you invest a portion in the stock market, you also invest in mutual funds, federal government bonds, and the treasury bills, commercial papers. All these things are things that give you fixed income because of your time horizon. Investing based on your time horizon. Now you're choosing the asset based on your time horizon. If you are a young man, like I said again, within the age of 20, 25, 30, 35 years old, there is no reason at all for you to invest in mutual funds. There is no reason at all for you to invest in bonds. Invest in things, in assets that are growing, things that will grow your money, that will not tie your money in just by paying you a fixed income. I'm not saying mutual funds and treasury bills are not good. Of course, they are perfect because they will give you a steady return. Of course, the stock market is volatile, like I usually tell us, is volatile, but it has more potentials. Those mutual funds you are seeing, the people, the fund managers put your money in the stock market too. You are giving them the money, they're putting the money in the stock market. They don't have the guarantee that the stock market is going to perform very well. But one thing they know for sure is that it will not remain the same. And the interest they are paying you is way lesser than what they are going to make. So if you are investing in mutual funds, like I said, it should be based on your time horizon. You have family, you want to at least before the end of before the end of the next quarter, you should be able to receive something from your investment that will guarantee use, that will guarantee an amount you get every month or every quarter for you to sustain your family, sustain yourself, pay students and children's school fees. All of that, these are things you look at when you are investing. So asset class diversification, like I said, has to do with diversifying, either investing in the stock market, mutual funds, ETFs, bonds, treasury bills. So these are the places you look at. Even real estate. Yes, when we talk about asset class diversification, you can invest in real estate. So these are the asset class diversification we look at. Now we have sectoral diversification. Now sectoral diversification, we are looking at the industry as a whole. Let's say you come to banking, you may pick one or two bank in the banking industry and invest in. Then you come to the food industry, you may consumer food industry, you may pick one or two companies in consumer food industry and invest. You may come to technology, you invest across all these sectors so that if anything happens to any particular industry, you will have something to fall back to. The crash in this banking sector does not affect your investment in the technology section. So we can see that the technology section is one of the biggest industry right now and is booming. Yes, there are companies in the technology industry that are booming. So you have to look at all those things. So sectoral diversification is now looking at not specifically in particular companies, but is looking at the entire industry. You have the technology industry, you have the banking industry, you have the consumer goods industry. All of these, you look at them. That's sectoral diversification. Now we have geographical diversification. Now, in geographical diversification, that is when we start talking about the foreign investments, foreign bonds, the US bond, the Euro bonds, the ETFs, the investment across borders. So we are now looking at companies like Apple. We are looking at companies like Facebook. We are looking at companies like Tesla. We are looking at any other investment that is outside Nigeria. Why are we doing this? We are doing this to curb inflation so that even when our money here does not have value, at least those ones will still be augmenting what we have at home. So that is geographical diversification. We are investing across borders. And thank God we have platforms that can do this for us. For some of us that are already using Bamboo, of course, it's a very good place to start, but I am not familiar with Bamboo. All I know is AfriInvest and the Optimus account that I asked everybody to download, which I am going to also teach us how to use it. But now I want us to master how the stock market operates first in Nigeria before we cross borders. Are we together?
Yeah, we're together. We're done.
All right. Then we have the investment style diversification. The investment style diversification. So I once told us that we have different types of investors. We have short-term investors, we have long-term investors. And in this class, like I said, my is in people that want to invest for long term. But if you want to invest for short term, you are good to go. There is no problem. But the truth is that if you want to see the real potentials of this market, stay at least 1 year in the market. That is when you see the real potentials of the market. Stay at least 1 year before you go out. So investment style diversification is now looking at you, okay, picking stocks that are growing. Not necessarily because you need dividend, but you are looking at stocks that are growing. Companies that have their stock are growing rapidly. Like if you look at MTN and if you look at MTN and Airtel, or if you look at that's under the telecommunication industry, we discover there is something. All of them are rising fast. Now, if you look at last week, there is a very big push between Zenith Bank and UBA. According to our analysis, a very big push between Zenith Bank and UBA. Zenith Bank is ahead, but UBA is trying to catch up in the market. So you can see that there is this push between these two. They are trying to catch up with the market. Everybody is competing for their share price to increase. And this is the right time for you to enter. This is the right time for you to enter because these companies already are challenged by what is happening in the banking industry. Remember that one bank already has gone out. GTB. GTB is now operating global. It is now traded globally. It is no longer listed only in the Nigerian stock exchange. It's also listed in the London Stock Exchange. So you can see that there's already a rapid growth in the industry. So that's what we are going to be looking at. So investment style diversification, you are looking at growing stocks, not necessarily by looking at them individually by company or by industry, but you're looking at stocks that are growing rapidly. I once share with us, I say Presco, there was a time I'm supposed to buy Presco at 400 naira. I said, no, Presco is too expensive for me to buy. But the past 2 weeks, or I did last month, something terrible, something magical happened with Presco. Presco was just moving fast. If you bought at 1,000 naira, the next day the thing was 1,1. The next day the thing was 1,2. So this week I did not pay much attention to Presco, but Presco is also a very big company. It's doing massively well. So you can see that people that are not looking for dividend per se, they are looking for the potential for that stock to move or to grow. These are kind of people that come, that's their investment style. They're looking at that. People are looking for the growth in the industry. They are not personally looking to wait for 1 year. They are looking at how fast can this industry, how fast can this company shares appreciate. So, and how do they know all this? They pay attention to what is happening in the organization. So you have to, like I said, you have to learn how to read news. You have to learn how to read news across different industry. Your best favorite news in Nigeria right now or all over the world should be business news. Anything that you're subscribing to should be business news. That is the one that will give you, that's the only news that gives me personally joy. All right, so we have the time diversification. Right, the time diversification we say is the naira cost averaging diversification. Why do we say it's naira cost averaging diversification? Now we are looking at, not we let's say you have 1 million naira that you want to invest, but you want to wait. You say, okay, I want to invest, let's say 500,000 naira today. Then the remaining 500,000 naira, I'll be investing it small, small, because I want to take advantage of the changes in the price, changes in the share price of those companies or whatever company I'm investing in. So that is what time diversification is looking at. We're looking at investing not everything you have at the moment, but you want to take advantage of the changes in the industry or the advantage of the changes in the share price. Sometimes the share price will increase, sometimes the share price will go down. So you want to take those advantage and be investing in them. Some people will not want to invest the whole of 1 million naira in one company, even though they have the intention to, but they want to see the changes as it comes. Access Bank last week, I made it clear. I say, if you have money, go and buy Access Bank. Of course, those that buy within those periods, if you look at it, before the market closed, the share price appreciated again. So that is another way. Time diversification. That is one way to also diversify your portfolio. It is not bad to consider all this type of portfolio diversification. It is not. Of course, we do it. Yes, we do it unknowingly. We do it unknowingly, but this is what it is, and this is what we are doing. So now we are aware of how the types of diversification we should be making. Now, so let's also look at a practical example. Let's say you have 1 million naira that you want to invest. Now, if you look at this table, let's say you have 1 million naira you want to invest. Now, if you look at this table, you can diversify your portfolio like this. Of course, please, let's take note. When you are investing, the money you are investing should not be part of the money you will use for your day-to-day activities. Before you invest money, make sure you remove whatever money that you are going to be using to sustain yourself and your family first. But another thing I will tell us is, don't invest what is remaining from your expenses. Remove a certain percentage of your money for your investment. Don't just say, let me finish sorting out my problems before I start investing. No, it is not done that way. If you do it that way, you will not catch up, or you will not meet up with your target expectation. So you first of all set a target. If your salary is 100,000 naira, what you will do is, okay, maybe 30% of my salary should go to my investment portfolio. That is just what I want to point out here. So if you have that kind of money, let's say you have 1 million naira now, you want to invest. So example, as you are seeing in the screen, you will say, okay, 30% of that 1 million naira should go into the stock market. Don't consider, you must not consider what I put here. Remember that this is just an example. You just say 30% of that 1 million naira should go to the stock market. Now, 20% should go to international ETFs, that's the mutual funds. Yes, it's possible. Mutual funds is good, especially when you are as a Nigerian. If you're investing in the mutual funds outside, you are sure of the economy. The economy is very good, and if you convert 20, if you receive $20, you understand what it means. I showed us an evidence yesterday of one of my students that received almost 40 something pounds because he invested in Alibaba, and day before yesterday they paid him some dividends. So you can see what it means. If he's in Nigeria now, he's a big boy, right? So with that amount, he has almost 80 something pounds in his account. So that's it. So you are investing in international ETFs. You say 20% to international ETF, then 20%, 15% to mutual funds in Nigeria. Then we have the bonds and the treasury bill, 20%. You have the cash. This cash is just like you're flexing cash. Or you can just say, okay, for emergencies. These are for emergencies. These cash are for emergency. You can just find a place and put it either somewhere you can easily access it. Yeah, somewhere you can easily access it, but with an investment mentality. You don't just take your money to the bank. If you are going to the bank to put your money, negotiate. Put the money in an interest yielding account. Even though it's OPay or all this mobile banking now that it's really, can you take the money there and put it there and you'll be paid interest every day. Even it may not be much, but it is better for you because it's easier. You can access it anytime. Don't go on. I don't advise anybody to go and put money in fixed accounts. It doesn't make sense. Fixed account doesn't make you any profit. So just find a place, put your money in a place that will be giving you money, where the money will be growing and you'll be seeing the evidence. Anytime you touch your money, you know that it has weight. So we have also, you can choose to invest in real estate. Like I said, you can choose to invest in real estate. Of course, you can invest in real estate here in Nigeria and you also be earning a fixed interest. We are still going to talk about that. I'm going to give us platforms. I'm going to show us companies that are into real estate that are also paying here in Nigeria and others that are abroad. So that is it on this class today. I will take our question because we have limited time and God will only give us 1 hour to do whatever we are doing for free. So we are going to take questions from what we discussed today. And if you have any challenge as well, you can ask your question. Ali, I'm seeing your hand. Or please, what is the problem? You can go ahead and ask your question. Are we together?
Yes.
So who is asking the question? Please, the person should go on. You can go on and ask your question. I'm listening. I'm listening. Emmanuel, ask your question.
Okay, hello. Good evening.
Yeah, good evening.
Yeah, thanks very much for the opportunity. Yeah. Please, from what you explained now, I understand that you broke it down based on that we should check our age, what we intend to do with our time, like, and and a lot of things that you explained. But let me just go straight. You mentioned about growth, things that grow like stock, which
Yes.
you mention regularly, buying of stocks, which I am already into, and I have intention of keeping it for a long time. But this short-term trade, um, I intend to also go into short-term trade with another broker, that is another investment app. So there is this question I asked earlier, but the question did not get straight. I have a FTN Cocoa in my bamboo, which is doing well. I bought it at three, I think either 3 naira or less than 3 naira when I bought it. But currently it's 7.50 currently. I have Ella Lakes, which I bought when it is very low, around 3 naira as well, which is above 11 naira today. So I have all those ones. But one thing that I am trying to ask, or one thing I'm trying to calculate is with this rapid movement, the reason I found out is because they are all agricultural based stocks. Like they are into food processing and a lot of things. So I noticed that that is one of the reasons why they are moving rapidly. Okay, now from your knowledge and from your vast knowledge, is there like any time frame? I understand the risk tolerance that we should always put our risk tolerance. Is there any time frames? Like because I intend to do a short term trade with my FTN Cocoa and the Omatech. I intend to do a short-term trade. I bought Omatech less than 1 naira, and today it is 1 point something. So I intend to do a short-term trade where I buy up to 500,000 units of each of these trade to sell them in a short time when it appreciates. What are the ranges of risks involved? I am ready to take the risk, but I want to know the ranges of risk involved. Can you give me any quick explanation?
Okay, no, this is the thing. You into short-term trading, you have to set a certain percentage of how you want to, a certain percentage to get to that you sell off or you go out of the market. Some people, like I said, some people take like 5%. Once they see 5 or 10% increase in the share price appreciation, they go out of the market. And
No, just
they also put of a stop loss. Now, this stop loss, we say, okay, if they buy at 1 naira and the share price comes down to, let's say, 90 kobo, they are out of the market. They are not waiting again. That means they are going for loss. So that is another aspect. So you have to determine the percentage you want your asset to grow or the stock to grow before you leave. So, like I said, you can say 5 to 10% or 5 to 20% or 10 to 20% growth. Once you see it, you are out of the market. And of course, you know it's not going to happen just like that. It will take a little time to
yeah,
appreciate.
exactly.
Though there are stocks that grow fast. There are stocks that grow faster, depending on what is happening within the organization and what is happening within the
Within the market.
within the market. So you have to put a
Okay,
percentage. You have to be the one to determine the percentage you want,
the
but it's
percentage.
not a
Okay,
guarantee. It's not a guarantee.
I know. Okay, the last question here, sorry. I understand this now, but my last question is the liquidity. Like now, yeah, how easy can it be sold at the time you want to sell it? Let's assume, okay, like me, let's assume I put a 5% increase. I pull out my phone, I pull out everything. So how liquid can I get these stocks?
Now,
1 week, 2 weeks, few days?
okay, now see the thing here. I can only talk of Afri Invest. I don't know of Bamboo because that's the one you are using. I can only talk of Afri Invest. Afri Invest take sometimes they take 5 working days to send you your money, but once you put a sell order in Afri Invest and it is executed immediately on the market, it takes 3 to 5 days for your money to land into your bank account. Sometimes you may not receive alerts depending on the network, but if you check your account, you will see them. You will see their name. You see your money. So it may not even be up to that 5 days, but it is liquid. You can get your money instantly depending on the condition of the market again and whoever is clearing you off.
Yes. Okay. Thanks very much. I love the explanation.
All right. Any other question, please?
If I'm allowed, hello.
Yes, you can go on.
Okay, if I'm allowed, apart from stock,
Yeah.
what other things can someone put their money for long term? Because I understand what you said about mutual fund, about bonds. It's for someone who wants day in, day out money. As for me now, I don't want day in, day out money. You understand? I'm a businessman, so my day to day money is not my major problem. I want
Okay.
more current now that way. In the next 5 years, it must have matured into a bigger growing stock, just like Guruge, this Femi Otedola's shares. Geru Power, yeah. That stock, I think either last year or last 2 years, it was less. I saw it, but I didn't venture into it
Yes.
because I was still learning what stock is all about then. It was even last year that I started. So as of last year, it skyrocketed. Presco, the same thing. I bought Presco less than 900. Today is 1,000 plus.
Yes.
You understand?
Yes.
So is there any stock that you can give us Like, okay, look at this one, look into it, go and study the company. Are there any company that you can mention
Yes, I used to give
that
recommendation.
we can watch out?
Okay, you just joined us in this platform, right?
No, I didn't just, yeah, yes, I just joined, I think late last month.
Okay. Now the thing is,
Yeah, late last.
I used to give stock recommendation every week. Yes, every week I give us stock recommendation. And during the week, if I see any change, if I see any change in the market, I also inform us immediately. Some of us took advantage of it last week, especially during the Access Bank I recommended. So I used to give stock recommendation every week. So you can see from the stock recommendation I give how which stocks to buy. It's not necessarily you must not buy everything. I also have students also who after reviewing, doing their own review, they will send their stocks to me. They'll say, okay, review this for us and see if it is okay. Then I review it, I look at it, then I'll give you my recommendation. But I give stock recommendation every week. Tomorrow morning, you before the market opens, you will see your stock and stock recommendation.
Okay, okay. Thanks very much. I appreciate it. Yeah.
So any other question? We have less than 15 minutes before God will tell us our session is over. Anything during the market, anything you're finding difficult when during the market or anytime you want to trade, just anything at all, apart from what we discussed. Yeah, good evening, Gloria.
Um, please, this my question now goes in like maybe I want to use like 5,000 naira to invest in stock, ba?
Yes.
So like, is it like every month that they open the markets that I'm going to invest every month? I'm going to be investing 5,000 naira, or is it every day? Or I don't understand.
Okay, depending on how much you earn and how frequent you earn your money, you can choose to be doing your investment every month. You can choose to do investment anytime you have the money and you feel like, this money I'm not using it for anything like this. Let me just take a portion of it and put in my investment portfolio. So it doesn't matter. So anytime you have the money, you can invest. But it's good to build up your portfolio, especially build your portfolio within 1 to 6 months. Let your portfolio be something that looks very attractive. A portfolio of 500,000 naira is not small. A portfolio of 200,000 naira is not small. In fact, depending on your strength, but just have something. Know that it will appreciate and you'll be seeing it.
Okay, so thank you.
Chinedu, I saw your hand up. Miss Ifeanyi, I'm coming back to you. Chinedu, can you ask your question?
Okay, good evening, sir.
Good evening.
Okay, I've been following up in your tutorials concerning on mutual funds. So I learned that we have different kinds of mutual funds, which is bonds, treasury bills, and money markets. So these money markets, I'm actually investing on money markets. So I also read you saying putting money in mutual funds is not really advisable like that because of the low interest rate and the rest of it. So this money markets this particular instrument, like some banks do pay up to 20% annually. Yes. So and is it not still okay that we invest more on it?
Okay.
Likewise, as we are investing on bonds and on stocks as well. Not minding the interest is a kind of question and contribution as well. So, yeah, is it not still advisable, okay, for us to still be building that money market portfolio as well, or we should just focus only on diversification of stocks?
Okay. Now, let me make it clear. I did not say that investing in the mutual fund or money market is bad. What I said is depending on your time horizon. If you're a young man within the age of 20, 25 years or 30 years, 35 years, I don't think this is my opinion now. This is my opinion. Money market, mutual funds have fixed interest. If you are investing in the stock market, that 20% they are giving you as interest can go above that. Yes, it can go above that. So if I am giving you the advice as a young man that I am not yet married, but if you are married, you need a more stable source of income. You need something that will give you a more stable source of income with assurance. That is when you have to go into money market, mutual funds, and bonds. Yes, mutual funds. If you put money in bonds or in federal savings bond, it's within 2 years to 3 years, but you'll be getting your paycheck or your interest payment every quarter. Every quarter you get your interest payment in bonds. Treasury bills is every 6 months. Likewise, other money market funds. Yeah. So, and that money market you are seeing, all those mutual funds you are seeing, the fund managers, where do they get the money they are paying you? They get the money they are paying you from the stock market again. They invest the same money you are giving them in the stock market. So imagine if they are paying you 20% interest, how much interest did they make? If they are going to be bold to give you 20% annual interest, that means they are making more than 20% interest at the end of the year. So don't rejoice because of the 20%. That 20% they are giving you just like a stipend. It is nothing to them because they have made more. Yes, if you're a family man, you need a more stable source of income to sustain your family, to do other things. It's okay. But for a young man or a young lady within the age of 25, 20, 30, 35, I don't think you have anything, any business. My opinion, I'm still saying it, my opinion, you don't have any business in all those fixed income kind of investment. You don't have any business there, but it's still good. It's still good. And it is also a kind of assurance. It gives you a kind of assurance, and because there's no risk, those ones are guaranteed and backed with the full faith of the federal government for bonds, for treasury bills. And the money market, of course, the brokers are going to give you your 20% whether or not. But also know that it's not all the money market that pays you. Okay, if you're investing in equity market, yeah, we have in Nigeria Invest, they trade on equity market. That equity market, they will tell you that the minimum percentage you're going to get is 20% of your investment. So what is the 20% of your investment at the end of the year? If you invested 200,000 naira and they are making 400,000 naira from the money from their money, that means they are going to pay you 200. They pay you 20,000, 20% of that, your 200,000 naira, not the 400,000 naira. So are you seeing it? That is just the difference there. So it is a good way to save your money. Yes. Okay, they are paying you 20% interest. Now look at the inflation rates. The same people that are giving you that 20%, go to the bank and ask them to give you a loan. You discover that they are not giving you loan based on that amount of money. Network lost. Sorry, I have a bridge on network. Are we together now?
Yes.
All right, so have I made myself clear on that, Chinedu?
Yes, I'm cool with it now.
All right. Mr. Ifeanyi, you can ask your question. We have 15 minutes to go. Hello, Mr. Ifeanyi, are you there? Mr. Ifeanyi, you can ask your question. We have 15 minutes to go. Or even less than 15 minutes, sir. So you can ask your question before we close this section. Okay. Is there any other person that have any question? Mr. Fanny, ask your question. Chinedu, your hand is still up. Do you want to ask any other question?
Hello?
Yeah, Mr. Fanny, go ahead.
Yes.
Hello?
Yeah, go ahead. Go ahead, Mr.
So sorry, I've been battling to unmute. Sorry.
No problem.
Sorry.
Yeah.
Chinedu brought up very close to what I wanted to get some clarifications on. I wanted to know exactly, because I've not done that. I wanted to know exactly the difference between the money market investment and mutual fund.
Okay. Money market investment and mutual fund is still the same thing. It's just different brokers use different name for it. Different brokers use different name for it. Money market is also has to do with the treasury bills, the bond, depending on whatever name the broker wants to call it. So we have different types of money market depending on the broker again. The brokers can call it anything. See, Stanbic IBTC call it Stanbic Balance Fund or whatever they want to call it. We have money market fund, we have equity fund, we have just any broker can call it anything, but it simply means the same thing. They are investing in either in the stock or they are investing in stock, they're investing in bonds, they're investing in treasury bill, they're investing in other foreign assets too. So that is what's the name they call whatever they want to call, just to entice people to come in.
Okay. And so from your advice, though, because of my age,
Yeah.
know, I wanted to know if, like, now you have 3 million naira to
Yeah.
for you on your own angle,
Yeah.
because you invest based on your discretion.
Yes.
Or if they are giving 10 million now,
Yeah.
you feel that it will be a waste of time for you to go and put in the money market, that you can turn over more than that 20%.
If I have 3
yearly.
million naira and there is no reason for me to go and put it in the money market or any other, I will trade it myself. I'll put it in stocks, in different stocks. I will diversify aggressively. I'll diversify both in Nigeria, outside Nigeria. It will give me more returns than what they are paying me at the end of the year.
Okay.
But if you're a family person and your age, you have come of age and you need more assurance, you need more guarantee, you can go by investing in mutual funds, in treasury bills, in bonds, so that they will be paying you that, you'll be expecting that, you'll be getting that steady fixed income. It's just like fixed income you get every day, every month or every quarter.
Okay. Then finally, for the foreign stuff,
Yeah.
you showed an example, somebody, but it was shown in dollars. So I wanted to know, if you want to withdraw, is it that they are going to calculate based on the prevailing exchange rate? I don't know. How does it happen?
Your money is going to
You
come
want
in dollars.
So you
If you invest, if you invest in foreign company, your payment is coming in dollars, and if they will convert it based on the current exchange rate. But if you are converting, if they don't to convert directly, they will convert using the central rate, that's the CBN rate. But if you are collecting the cash from the bank and going to the black market, of course, you know that the exchange rate will be different. And
you can withdraw the dollars in bank.
yes, you can withdraw. You can have domiciliary account. You can open a domiciliary account and withdraw and be transferring all your foreign investment into that account. Yes.
So it's allowed.
Yes.
Okay. But in the absence of that, like every invest now will do the conversion or what?
Yeah, Afriinvest will do the conversion for you and send your money in naira.
Okay.
Chinedu, you can ask your question, but I don't think we have time again. Let me see.
Okay. Based on the question is actually based on what I during the time I was going through the ebook. So I discovered that we also have bullish and bearish season for stocks. So now, and now I have little idea of crypto. So then they used to tell us during the time of bullish, you don't buy like that, and because it's a setup. Because if you buy, it's a kind of form of fear of missing out and the rest of it. So I'm actually driving to somewhere here. So and during the time of bearish period, you buy more. That is deep. During the time of deep, you buy more. So now, from my observations, I think stocks are going up now. So is it really advisable to buy as it's going up, or should we hold on till when it comes down, we'll buy?
Okay.
Yeah.
Now,
Yeah.
okay, I understand your question. Now, if you look at the crypto market, the FX market, they are more volatile than the stock market. In crypto market, once you lose money, you have lost the money forever. True, true. Am I communicating your intention? In crypto market, once you lose money,
Yes, sir.
you have lost that money. But in stocks, your quantity of stocks still remains. But what happened is that the share price has gone down. If you have faith in the company, so far that company is still in existence and it should continue to be in existence, and they don't have any problem with SEC at all. They don't have any problem with SEC at all. You don't have anything to fear, because once the share price comes up again, everything will move back in place. So there is, I say it always, I will continue to say it, there is no right or wrong time to enter the market. Yes, there are stocks that do well. And what drives this market, the stock market is market sentiment, participant sentiment. What is happening in the industry? What is happening in that company? If you have an interest to invest in the, okay, let me take an instance. We all know what happened between GTB Bank and VDM around 2 months ago, a bit 2, 3 months ago. We all were expecting that because of that little incident, it was not little though, because of that incident, that the share price of GTB Bank will go down. Everybody was anticipating that. But unfortunately, the share price of GTB Bank went up above 20% in that the same period. So you can see there is no wrong or right time to enter. Zenith Bank also, when CBN issued that their circular on Zenith Bank and other banks, Zenith Bank shares, we are all expecting that, okay, because of this news now, it will send fear in people's heart and they will start pulling out their funds. But it's quite unfortunate. The share price of Zenith Bank that day that the announcement was made went up. So in stock trading, there is no wrong or right time to enter, depending on your conviction and depending on your interest, on your style of investment. If you are a risk averse kind of person or you're a short time trader, so that is when you will be looking at, okay, let me wait when the price comes up again. And that means you will have to be paying attention to the stock market, to every movement, every hour, every second in the market, to know when the price comes up and when the price goes down. So I will still say it again. In stock trading, there is no right or wrong time to enter the market. If you have your money and you feel confident that you want to enter the market, you go in. You go in and buy your stocks. Cryptos, FX are more volatile than the stock market. And if you look at it, FX they are not regulated the way SEC is regulating the stock market. There is no much regulation. That's why anybody can come up with any kind of crypto and start trading it. Have I cleared you, or there's something again? Because we have less than 1 minute.
Okay, yes, you've actually cleared me. But the thing there, okay, in the aspect of, let's say, this there's these stocks I sent you say flat.
Yes.
I think it's around 1,000 something now. So as a new as we are beginners now in this stock market, so is it advisable for us to go with those guys that are above 1,000? Yes. Is it advisable for us to
Depending
uh,
on depending
for
on
us
how
to
much now, depending on how much you're going into that market with, depending on how much you're going to, people that are going to that kind of if you look at in fact, if you look at their trading volume, you discover they don't have much trading volume like that. Just open Apple Invest, you look at the order book, look at the trading volume of those share price that are above 1,000, apart from Presco, because Presco is now sending signal. Everybody is now looking at it's now eyeing 2,000 naira share increase. So that's what their trading volume is going to be increasing. But if you look at those stocks, like those ones that have 1,000 plus and 2,000 plus, their trading volume is not much because it's not everybody that is entering the market. You cannot 100,000 naira can only buy 100 about 50 units of shares. And what it means is that if they declare dividend of let's say 2 naira per share, what are you getting? 100,000 naira. If you have 100 shares, they will just you don't have much dividend. So people you also look at those things. But if you are interested in share appreciation, you can also go ahead and invest. You can also go ahead and invest. These are some of the risks. These are some of the things we consider. These are some of the risks also in the market you have to consider. You don't just sit down because you don't have enough. You can also look at the other companies that have lesser share price and buy. But before you do that, look at the company prospects. What where is the company going to? That's the fundamental analysis I'm talking about. Look at where the company is heading into. When you fish out, you discover that there's something fishy in happening in the company. You don't need to put your money there. Don't put your money there. Most of our stock recommendation, you will see that they are coming in line with banking. They are coming from the banking sector. It's not because we so much like bank, but bank is highly regulated. It's not as if there is no wuru or magu that is happening in the bank. Of course, there are. There everything. There are wuru and magu everywhere. So you don't just sit down and watch. Take a leap of faith, like they say. Take a leap of faith. So if you have money, a significant amount of money, if you have a significant amount of money and you have a reasonable portfolio, again, if you have a reasonable portfolio that when you look at it now, you'll be feeling happy, you can go ahead and invest in those Geguru and Seplat Energy, whatever. So,
Okay, then another thing is thank you so much.
our class is ending. Our time has expired. Maybe we can talk on the WhatsApp group privately because if we need to extend, then we have to also increase our subscription base. We only have 1 hour to use this platform. So we can just go ahead and ask your question in the platform and we answer you.
All right, sir.
All right.
All
Thank
right,
you
thank
very
you.
much, everyone.
Let the question be on the group so everyone can see it.
All right. Yeah. All right. Thank you very
Thank you.
much. The video will be made available in the Telegram section for you to review and see you next weekend. Tomorrow morning, before the market opens, you are going to get our stock recommendation. So thank you very much. Good night.
Thank you, sir.